There we go. Everybody see my mouse moving from side to side?
Yes.
Great.
Yes, we can.
Okay, super duper. So we're looking at Solana, yeah? So very simply is where does a beginner start? And the first thing we need to do is to be able to get you to center yourself with the price action, is to find a ground in it that you can start to read and make sense of it. And there's a repeating pattern that happens over and over and over. And I'm going to show you that repeating pattern over and over and over. And then I'm going to get you to triangulate it, is to begin to map it out. And that you're going to see the same pattern play out on the 1 day, and then I'll go down into the 4 hour. You'll see it in the 4 hour, the 1 hour, the 15 minute. Is no matter what timeline you look at, you're going to see this pattern play out. And what that's going to do is that's going to center you in the charts. It means that when you map these patterns out, is you'll be able to see where price action is at any moment. Is it at the beginning of this pattern? Is it in the middle of this pattern? Is it at the end of this pattern? And as you get more refined, there's the swings, there's the highs and lows of it. Is it on the way up? Has it swung and now it's on the way down? And has it swung and is it on the way up? And the more you read it, the more you'll be able to read the swings, and you'll be able to trade the swings. So you can trade the bottom going up, or you can trade the top going down. And that it just helps you recognize the direction that the price action is going in, and then get ahead of it, is to be able to map ahead of it. And that's where you want to be. Know where price action is, and then know where price action is going, and that you can begin to then trade on that. So to do that, you got to be able to center yourself in it, to be able to read it, make sense of it. And a nice way that I describe it is like an artist. Is an artist, the first thing they'll do is they'll do a general outline of the thing they're painting or drawing or sculpting. Is they don't go straight into definition. They do a general outline first. And your triangulation is your general outline. So this is Solana on the day. And all I'm going to do is I'm going to start making triangles. It's really that simple. Is the magic sauce to it is that it has patterns. So this is the pattern that we're looking for. We do this big one in a bit, yeah? But I'm coming down here, going lower into the pattern. So this doesn't look like much until you start to zoom in. And look at this one forming. Well, it's already there, but as we zoom, we can start to see it. So now I'm going to come to the sidebar here, and 1, 2, 3, 4, 5, 6 down. Give it a click. And 1, 2, 3, 4 down. There's the triangle. Okay. So what I'm looking for is a bottom here, and then there's a top. There's a bottom. There's a top, and we're going to bring this down here because that fits in to covering the bottom, and then this one here, bring it to there. So we have one wave, a second wave, and then a breakout. It really is that simple. Now this is the daily, so I'm going to color this. I have them color coded. So I do my dailies, gray. Purple is my new monthly one. Purple is my new monthly one. So
why did you put the D in the timeline before C?
Actually, my dailies are orange. There you go. There's my orange. You're talking about here, yeah?
Right.
Yeah. Think rather than D before C. That doesn't matter. What matters is a bottom, a top, a bottom, a top. So the next bottom I saw was this. And then the next top I saw was this. But if you look at this, it's leaving this part out. So now I brought the C down to the bottom, and then I brought D to that little bit, that wick that was sticking out, because that's the peak of the top. And that completes, that encapsulates the waves here. And then when you see this breakout, here's the breakout. And it's nice and tidy. Rather than if I'd have left it like this, I'm leaving this price action out. So you don't leave the price action out. Does that make sense?
Makes sense. Thank you.
Yeah,
quick comment here, if I may.
Yeah, go for it, Jeff.
Thank you. So if I heard you right, you were saying, okay, so like let's put C at the bottom. Does that mean D is like the top that's closest to the C?
You could say it that way. Yes, yeah, because look at the space here, and I'll say it to you this way: here's an impulse wave, Elliott wave up. Here's an ABC correction. Here's a smaller impulse wave up. Here's an ABC correction. So now here's the top of that final ABC correction, and here's the bottom of it. So I'm making sure that it's all covered. And literally it's two impulse waves, and then you got a breakout. Sometimes you get a third smaller one, and then you get the breakout. Now this one's going up. You can't have them going down as well. So at the end of, you have volume, the bigger one, then the consolidation, and then the breakout. Again, sometimes the third one, and then the breakout. So this triangulation is an arc pattern. And what I mean by arc pattern is that look at where it starts. Look at the peak. And then look where it returns to. It practically returns to the entry point it started at. And then it breaks out. So it's almost like the end of it returns to the start of it. Okay, and that's why it's an arc. It's an overarching pattern where the beginning is very much nearly returns to the beginning again and then breaks out. And it's using impulse waves. And this is repeated over and over and over and over and over, which I'm going to show you. So this is the start of it. I'm mindful that I could start putting in Elliott waves now and ABC corrections. I'm not going to. I'm just going to stick to these for the moment. But look at the size of this one. Is this was 56 cents all the way up to $5.31. Now when we zoomed into this looked tiny. It looked tiny, but you see when you're trading this at the time, look at that, 891%. Massive gains, all in one go. And it's an impulse wave. So if we were trading this and we'd cut this at the beginning, it's a massive trade. Okay? So now this is one. This is, and by the way, these are daily candles. So this arc, while it looked tiny at the start, is the 15th of June 2020 to the breakout here is the 1st of January 21. That's 6 months. 6 months. Look at this here. The 15th of June to the 1st of September. June, July, August. 2.5 months, 8 weeks of glorious pump. Okay, now this is another bunch of weeks of glorious dump, where this is equally as profitable to trade on the way down as it is on the way up. This is the beautiful thing about trading, is going up or down doesn't matter. Is you can make a profit on it. Okay, so now look at this. Got to zoom. Got to zoom for this one.
For a quick question.
Yep.
How do you know where to start the A you started at what, 15th of June. So how do you know where to start the arc? You put it on A, right?
Yeah.
On 15th of June.
Yeah.
So how far back do you have to go?
Yeah, great question. Because
I get confused on that bit because I don't know where to start because of how far back to go if I'm doing a daily.
Yeah, totally. What I did was, like, I can see another one in there. Is what I did was I zoomed in.
Yeah.
And my question is that where's the bottom here where an ABC correction completes itself, and then in Elliott wave, an impulse kicks off. So I would probably put the impulse wave here at 1, 2, and then up it goes. So I'm looking for, if you look at this, it's not the bottom. This is the bottom, but this is a bottom. And I can see that there's the impulses kicking off. You can see look at the difference in volume between this and that. So this bottom here is the end of an ABC correction and is the beginning of a new Elliott wave. So
right, got you. So it's advisable to zoom in and take a look at that before you place the A, yeah? I think.
Yeah. And to be honest, you'll see it with the more you do it, you'll see it with your eye. You know, you'll go, okay, that's where that's where it is. You know, like
right. So that's when you know where to start. Okay.
Yes. Yeah.
Right.
Yeah. So you can see you can see there's another one here. So now this is the bots. This here is, you always get when a coin launches, you get the bots.
When a coin launches, always happens like that, isn't it?
Yeah, what happens is that all the bots get put on it, and the bots run the price up. So it's best to let the bots do their thing for a little bit, and then what happens is that the price action will come down, and it'll settle, and then once it settles, look, then it's into its real price action. So you can see if I zoom in here. Sorry. If I zoom in here, I'd probably start that there, because look, there's the bottom. It settles, there's the bottom. There's a top, there's a bottom, and then again, I want to go all the way to where, now you could say there's a top. Look at how smooth that is. There you go. There you go. And look, here's the Elliott wave up, ABC correction down. Look at this sideways Elliott wave up, ABC correction down, 2 waves, and then here we go. Look at this one, bottom, and then breakout. This is the transition, and you always have the end of one arc. There's a point where the end of one arc is the beginning of another. So now look at the recent drop we had a day or two ago. That's this drop. And on the daily, we had a big dump. The daily completed its ABC across the market. The whole market dropped. And on the daily and the weekly even, it had its final C correction. And now this is the beginning of the Elliott wave. So I believe that you're going to see the movement where it'll go up a little bit and then it'll come back down. And I think that coming back down, it's called a double bottom. It won't break this bottom, but will come close to it. And it'll be the 1, the 2, and then the movement of 3, the Elliott wave away. And it's the beginning of a new arc. So we're already in the beginning of a new arc since this bottom happened. So that's where I believe we are. There's a lot of people, and we were talking about the difference in a linear mind and a Fibonacci mind last night, is the linear mind sees that big dump, didn't want to believe it, but now when it's happened, now they're going to the other extreme. Oh my God, the world is going to fall in, it's going to collapse, it's going to go lower, it's going to go. And then when you see it coming back down to do a double bottom, people are going to freak out thinking, oh my God, the bear market. And then most likely it's going to stop just before it, turn around and head back up. And it catches people. And then it's only when you start getting the volume coming in, that people believe that, okay, now the next cycle is kicking off. Okay, so I believe anyway. We'll find out over the coming days. Yeah. So now let's continue on. Yeah. And this is just the daily. We're still doing the daily here. Great thing about Solana is that it's done a lot of movement, so it gives us a lot to work at. So now you can see look how tiny that is. But if we actually measure that, I didn't actually measure that. If we measure that movement, is again that's a 96.228% movement. That's 100%. That small arc there went up 100. The price went up 100%. Again, brilliant to trade. So now we're going to look at this here, and again look at this. Look at this for a pump. Okay, super duper. Okay. So and again, we got to get in at the bottom. And again, look, there's that little red. I'll zoom in so you can see. There's that little red candle again. It's on a different part of the chart, but it's still the same red candle. Okay. And just to give me the space to zoom in here. So now, I just stretch this out. So I have the bottom down here. I go to the top. There's the top. Then I bring this one to the bottom. And essentially, it's the bottom candle or wick that encompasses all others. So nothing gets left out. And then this one here is, and you would map this out gradually. So, you know, I'll be watching this, and you don't know. Let's imagine price action is here. So I've got this and I've got that, but none of this has happened yet. So where do you put these? So again, normally I would have them like this. So I know it's going to move into this space, but then as the candles show themselves, I map it out. So look, this one is showing itself. You know, this one is showing itself. So I put it to here. Then this one shows itself.
What quick question? You know,
yeah.
I think using the impulse wave, impulse waves and ABC corrections, you could map it out pretty accurately, and then put your D, you know, and kind of move it as the waves kind of create themselves. Is that correct?
Exactly. Yes. I think you're answering the question half a dozen people are thinking. You know, exactly. You can do that. Now look at this. All this is getting caught down here, left out. So I'm going to bring this one back down here. So the truth is that if I put that there like that, because I have to include this, I would have left this here and I wouldn't have touched that bottom again. So all this would have got included in the first place, because I wouldn't have left this out. I'm only noticing it now, but I wouldn't have cut it. I wouldn't have cut it all off like that. You see, when this candle appears like this and it cuts this out, I would not have left that there. I would leave it there like that. There we go. Okay. So now,
what's happening?
Again, look at this. Is an Elliott wave up, an ABC correction down, is ABC correction down here, and then an Elliott wave, ABC correction. Now there's three here: an Elliott wave, an ABC correction. So you can see the wave here: 1, 2, 3, and then a breakout. So there was 3 on this one. This is the biggest one with the highest volume. Then this one has a lower volume, like a bouncing ball, and then this one has a lower volume. This one's like a consolidation, and then a breakout again. So you can look at the resistance lines here. So when it breaks this is a nice, clear, solid resistance line. So when it breaks this, up it goes. And again, if it's come to if this has come to an ABC correction here, and you know we're coming into the end of this arc, well, doesn't this tell you that if this is an ABC correction, what's coming next is an Elliott wave? So an Elliott wave, you know the Elliott wave is going to break out of this. And you know because it's come into consolidation, there's going to be a big Elliott wave. Okay? The part of how you can map it is you can use the fibs. And again, I don't want to get into this too much today. I want to show you just showing you the triangulation. Is you put a fib on.
I got a question.
Yeah, go ahead.
So you move C back, that way all the candles can be open.
I move C all
So
the
we had it up there.
Exactly. I put it all the way back here so that I didn't leave these candles out. You don't leave candles out.
So we always
Always. You want you want a complete picture, not a convenient picture. So leaving wicks and candles out that are not convenient is you don't do that. You want a complete picture because it encapsulates all the price action. Okay. So again, look, another breakout. Woohoo! Okay. Now this is how good Solana has performed. It has been amazing. There's another pump. 8x. This is an 8x. So it went from $1.06 to $60. No, excuse me, that's a 60x. That is a big pump. That is a big pump. I believe XRP is somewhere in this bull run is going to do a pump like this, where you're going to see such a big pump. So now here we are again. Look, there's that red candle again. Bottom to the top, and again, now this hasn't shown its bottom, but it definitely looks like it has shown its top. Oh, hang on. Has it shown its top? It's quite possible. No. I think possibly Solana here is this is 3 on the Elliott wave. This is 3. This is 4, and I think Solana has another pump in it. I think Solana has another pump in it for sure. Yeah. So now we're mapping. Now we map this one out, and we're observing that as it goes. But now look at this. Here's the Elliott wave up. It's quite possible there's one more pump to go, and then it'll have its ABC correction. It'll have another up and down, and then the question is this the end of the bull run for Solana, and that this correction becomes an enormous 90% correction all the way back down? Or is it a continuation of the bull run and we get a breakout and we have another leg to go? So there's an extended cycle going on here. It's not going to finish anytime soon. So I would imagine Solana has another leg to go. But we'll find out. But there, look at this on the daily. Look at this on the daily. We have mapped out 1, 2, 3, 4 arcs so far in Solana, and following the same pattern. So now let's go into this one. Okay. And we're gonna zoom in, and there's the daily. So let's zoom into the 4-hour candles. Actually, maybe tell a lie. Let me do the weekly first. Let me do the weekly, just out of curiosity. Just out of curiosity. Okay, so now on the weekly, I would suggest there's another. Look at this Elliott wave. Look at this here. Okay, look at this. So that if we put, again, a bottom here, a top here, and a bottom here, and a top here, and we're going to make this one purple. Because my weeklies are purple. So now look at this one. Over the weekly, which again started approximately 28th of December 2020, it's reaching a peak now. I'm not sure whether it's the peak or we have a retrace to 4 and then a 5. I believe that this is 3 on the Elliott wave, 4, and then up we go for 5. So, but you can see now that the weekly from the 28th of December all the way to, again, the 8th, well, we're up to December now, this is a year. But now look at this one, let's say this breaks out up to here, whatever it is, yeah? And then it does that correction. And then it has a wave here, and then it has a wave there. This is taking us all the way, look at this, February 23. This could draw us all the way into the bear market. So by the time this is ready to break out again, it's the next bull run. So this is us mapping out the bull run to where it goes, mapping out the bear run, the consolidation until it's ready to go again, and then we have the breakout a couple of years later, off it goes. So the purple is the weekly.
Feel that it's going to pump again.
Oh, I think that this is of an Elliott wave. You get the 1, 2, 3, 4, and then I think it's going to go again.
Okay.
I think it's going to go. So the question is, how far is it going to go? It could again. Yeah, to me it looks like it's definitely got a 5 to go in the Elliott wave. After that, this one is so big, and once it reaches a peak, it's going to have to correct, and it's going to take time to correct it. It won't come down and do a quick correction and go again. It's going to have its full ABC correction, and then another wave, an Elliott wave, ABC correction, consolidate, and then go. So yeah, I think Solana possibly will have one more massive pump, blow off top, and that might be it for Solana. But now look at this. This could be the 7th of March 2022. This could be March before this happens. You know, if it's an extended cycle, it comes back down, goes again. Yeah, if it was an extended cycle, this could kick off again autumn 2022. Has its retrace, you know, and then here we go in October, November 2022. If the cycle really is extended, this could go again and kick off. Or you could have that long consolidation phase where it goes long and volume goes low. And then here we are on November 2023, and now again the 4-year cycle starts to kick in, and it just starts to break out and move again. And it'll take time to get going, but you'll see the volume start to come back in.
I have a question.
Yeah.
On the two triangles that do not have data, the ones after November,
Here, yes.
point C and D, because you have no data. Is it, and the shadow changes drastically depending on where you put them. Like, is that just an estimation?
Exactly. Yes. Yeah. It just I know it's going to move into this space. I can use the fibs to get a measure of. Like, I'll give you an example. Let's say this is 3, which I think it is. But now, how far down is it going to go? Is if I put a fib on it, is the golden pocket should give me. I'll do it this way. I always get this mixed up. So I go from the bottom to the top. There we go. Look, there's the top of that there. Now, if I go, this is 3, it's going to retrace and go, how far is it going to go? I'd say it's probably going to go to the fib, the golden pocket, the 618, and bingo, look at that, right to the 618. So, but this is later on. I don't want to talk about this too much today, but we can use the fibs to begin to measure the impulse waves. Do you understand? So
yeah, got it.
Yeah, so seeing this as a peak. Now this has been, look at this. This started on the 8th of November. This downward trend, 8th of November, all the way down. So again, if you'd have seen this turn, I'd stick a fib on it and go, okay, that's my target. So you put a target in there. And we've been in a bear trend for the last month or so. So I've been trading. I've been a bear the last month, you know, where now, because I think it's hit the bottom and it's going to go back up, is now I'm a bull. I'm a bull since that dump 2 days ago. I'm officially a bull. Okay, so now we got to go in. There's the week. Here's the day. Okay. I'm going to zoom into this one. Because these are long, you can do very long trades over these, but you can't do daily trades. So now when I zoom into the 4 hour. Okay, so now I'm on the 4 hour. Okay. What one do I want to do? I'll do this one. Okay. So now look, here I am on the 4 hour. So every one of these candles is now 4 hours long. So that's the difference. The day is a day candle, and a weekly candle, and now a 4 hour candle. So again, you got to remember, if you were talking earlier on, your mic gets left on, and I can hear you. So you got to turn your mic off. Turn your mic off, please. Idar? Is it Idar? Okay. Okay, Idar, I'm going to mute you. Okay. Okay. Guys, you got to remember that when you ask a question, is you unmic yourself, and then you got to then mute your mic again afterwards, yeah? Okay, so where were we? Solana. Okay, so now look at this here. I'm zooming in. I'm zooming in on the 4 hour. And what I'm looking for is more arcs. Okay, more Elliott waves, more ABC corrections. So this is a nice low volume one at the start. So again, here's my triangle. I start here, there's my bottom. There's my top, there's my bottom. And then there is my top. And then I got to bring this one to here to facilitate that. Now my 4 hours are blue. So there's the Elliott wave up, ABC correction. Now again, this one did an Elliott wave up and then it broke up again. So this has a one wave and half, and then up it goes. Okay. Now that's because we're having it move into a pump. Okay. So this is a small one, and again, you can get a small one at the bottom, but now this is where you'll notice how the arcs change shape depending on what way price action is moving. So here's a bottom, here's a top, there's a bottom, there's a top, there's a breakout. So here's this big Elliott wave up, ABC correction, Elliott wave up, ABC correction, is Elliott wave up, ABC correction, and then up you go. So now you could nearly say, well, what about if we did this, Roy? And we did that there. Okay. I wouldn't do that, because you look at this and people will call that then a fake out. Is that it pumps up here, and this is where people can get caught. You get the pump up, and then you get this drop, you know, and then you get the real pump up. So people will go long here and then get stop lossed out. And then they might even go, feck, it's going down, I'll go short here, and then it goes down here, and then it go up, and then it gets knocked out, and they get caught either way. And people are like, Jesus, I'm lost here, what's going on? Is I would put this here, and I will put that there. And essentially the reason why this happens is because if you look at the pump here, it consolidates. Now it's going to go in another pump. The more familiar you get with this, you know this is a parabolic pump. Is to get a pump up is you got to get a pump down. So it lifts itself high. So when I see this coming up here, is I know it's preparing for a pump up. But when I see this go above this, is I'm expecting that. I'm expecting that you're going to get this down and then you get the pump up. And again, that's because of experience, yeah? But still, look, here's the Elliott wave up, is the ABC correction. Is Elliott wave up, is the ABC correction. In Elliott wave up, if this is an Elliott wave up, what do you get? An ABC correction. Now we're down here. What direction are we going? We're going up. So this is how you read that. So when you see this here, is AB or Elliott wave, ABC correction. Now you know that this is created the push up to get the push down to get the pump up. So that's how you read that. And again, as we get more into it, it's the nuances of being able to read the impulses, and as you come to the end of an arc, is being able to read the end of it to give you an indication of what way it's going to go, so that you don't get caught in this. You don't get caught out here, you don't get caught out there, and you're ready for this. Okay? So, but again, we're still under 4 hours. But look, now we're going up, and this is going to be a bigger one. Here's the bottom. And this is where it gets a little challenging. I'm not going to do this, but I'd be half tempted to do this. I'd be half tempted to do this. Okay? In fact, I'm going to do this. It's just one wave and then a second wave. Or am I? No, I'm not going to do this. Okay. I'll stick to my guns. Okay. I'll tell you what I'm thinking, yeah. Is this is going to be a really big one. And the reason being is that this is a really big Elliott wave. And rather than break it down into compartments, is this 4 hour is going to be a big 4 hour. There's a bottom, there's a top. There's a bottom. There's a top. Now I'm going to have to bring this to here. And I'm going to bring this to here. And just to catch this in here. There we go. Okay, so now this one is an impulse wave up, ABC correction down, impulse up, ABC correction down, again impulse up, ABC correction down. So now you know what's coming here because we've had our three waves. You know the breakout is coming. So what protects you from getting caught on, oh, this is it going to break out now, it's going. Well, hang on, this is an ABC, this is an Elliott wave. Is this Elliott wave, as it shows itself, and we can measure with the fibs, tells us that this isn't the breakout. And then when it reaches here and it starts to move back down, is now you know this is the ABC correction. Now you know that this is the breakout. And again, the fibs will help us here. I'm not going to go into it today because I'll end up getting onto the fibs. I just want to show you the triangulation. And look at how spot on it is all the time. Look at how spot on it is all the time. Now this is the 4 hour. Look at how small that one is. There's this one. And then there's this one. I am tempted to break this one down, but if I start to break it down, it doesn't facilitate the Elliott wave, the retrace, the Elliott wave, the retrace. So I'm going to use all of this. So sometimes the 4 hour one is quite a big one, okay, compared to this one. And that can be a challenge. That can be a challenge to read sometimes. So this is the 4 hour. So now we're going to zoom in. We're going to zoom in. Let's go back to here. Because again, these are long. Like this started on the 24th of December, 28th of January. That was a month. This is the 29th of January to breakout 28th of March. So 2 months, that one. Again, this one went on for many months. Okay, so now if we go down to, look, there's the 4 hour. Here is the hour. Okay. And let's start mapping out the hour. So look, when we zoom in, let me just save this. Actually, let me just put a name on this as well. Sol USD chart. Okay. So on the hour, again, each one of these is an hour candle. Okay, and this again is more opportunities to trade. Let me just get these exact now. Put that there. See, you zoom in, you can put there. Why is this here? Put this here as well. Oh, hang on, I'll undo that. I'm not sure. Okay, leave that there for now. Okay, so now on the hour is there's a triangle. Again, this one is a sideways. Again, we're going to start at the bottom. There's a top. There's a bottom. And then, because this is a higher top, I'm going to bring this here. I'm going to bring that there. There's that there. That's the bottom. And again, you can see that it's leaving this part out, so I put it there. So it fits it in. Okay? And again, the hour candles are red. So there's the red. Okay, so now again is you have the Elliott wave to the peak here. You have an ABC correction, and then you have a lot of volatility here. So this is part of the ABC all the way to here. So here's where the breakout is here. So this one here gives us is more challenging to trade because you got volatility here, and then you have the breakout. So this is wave 3. There's wave 4, and there's wave 5. Yeah. So the breakout of this will be a challenging one to read, but it's still, because it's a sideways action, it's a wave up, it's a wave down, it's a wave up is the Elliott wave breaking out here, and a lot of volatility. So on the hour, this no doubt will be a challenging one. However, not that challenging when you start to observe the greater pattern. We know this is the beginning of a greater breakout. Okay, so I would know that, and I would know that this is moving into an explosion. It's breaking out of this one, and we know it's going to be a biggie. So now, when I see this coming in here like this, and I see this drop like this, and I know that this is going to break out soon, I would put my long in around here. Right here, I'd put it in, nice low point here, and then I would just avoid all this, and I would let it play out until it does its breakout, and I don't even get caught up in battling all this. So that's basically what I would do, is catch the bottom here. Okay, which is again it's another conversation for another day, so that we're avoiding messy stuff like this. Okay, but there's one. Now there's a bottom, there's a top, there's a bottom, and there is a top. Now you'll notice something here is, look at this purple one. This is a 4 hour, and we're after separating it into 1 hour and then a 2 hour. And that there's confluence points, is that they mirror each other, they map each other. So now this chart started on the 23rd of December to this 8th of January. So this one is only just over 2 weeks, you know, and the volume is low here. So there's a challenge to trading this, but when you get the breakout here, that's what you're looking for. You want to get that breakout. Now you swing trade. Is you can go short to here, you can go long to here, you go short to there, you go long to there. So it catch the breakout, and then you're trading the swings. And then this again is the first breakout, the first level, and here's where the parabolic really takes off. Okay, so now we got to look for, and I'm sure now if the guys who've been here a little longer, you're already seeing it with your eye. There's a bottom, there's a top, there's a bottom, there's a top, and there is a glorious breakout. Okay, so again, Elliott wave up all the time, Elliott wave up, impulse up, ABC correction down. And then here we go for another 1, 2, and then powering off again. So now here, this is just one wave, a smaller wave, and then you have the breakout. Okay. Now again, part of what we're doing is, where would I go? Where would I look to my entry point for this? Is here. This is where I'm looking for my entry point. And what I'm looking for is, this is mountain peak, this is third drop, final peak, final bounce, This I know is the final low of this arc. This is where I go long for this. I don't wait for it to go in here. I don't wait for the confirmation here because I have confluence. I know from my other arcs and the higher timelines, this is going up. I know that. So that I go here and I take my long here and look, all this moves away and I don't even get, see all this up and down here, see all this battle here? I completely avoid it. Before I knew what I knew is I used to be trying to catch the breakouts here. And then I'm getting caught. I'm getting caught in the retrace. Because you always get, when you zoom in, what you always get is when you get the breakout, you have a candle that comes back to retest the breakout line, and then you have the breakout. There's a strategy where you see the breakout, you get the retrace candle, and then when you see it going higher than that again, that's when you go in, because you've got confirmation of the pump. I used to do that, and I used to get caught in stop loss battles all the time, until I realized, look, this is the final bottom before this goes up. This is where I go in. Go in here, make profit on this, and avoid all this bloody mess. Avoid the battle that's going on here, and then up I go. Okay, and now this is 1. This does a dirty big retrace back to 2. If I'd have gone in here like I would have before, all the people that went in here comfortable that they've got the confirmation, look, they all got wicked out here. They got knocked out of their trade here. Not here. No, this is a sweeter position to go in. So we'll be getting into those conversations as we go further along. Okay, and it's all about position. We're position trading. You're getting your best position, and then you ride that puppy all the way up, so to speak. You know. So now, here we go. Bottom, top. Now you can see that we're moving into a bigger arc again. Bottom, top, and again. I'm already seeing this here, so I'm going to put this here there, because I'm not leaving that out. Okay. Now I can see this here as well. Now again, if I'm just mapping out the hour is this one can be a little challenging. And the reason being, you've got your Elliott wave up. You've got your ABC correction down. Okay? Hey, there we go. Bottom of the A. Or C. Now you've got your Elliott wave up, and then you got your ABC correction down. Okay? So now this is a long drawn out one. So look, you have another Elliott wave up that's higher than this. You don't really get that too often, but you're getting it here. Okay, so we got to move this to there. So you're following your Elliott wave up. You know there's going to be an ABC correction. Okay, so there's the ABC correction. Now there's where you go in your entry for your breakout. And look at this, it goes up, touches off it. Again, if you're impatient here, you go, oh, look, I'm going in now because I've done this before. It's breaking out. I'm trying to get ahead of the game. I see it's going, so I'm just going to jump in. You know, and then you get this retrace, and all of a sudden you get knocked out. It comes back up, it breaks out again, and look, it retraces again. Oh God, I got knocked out again. I've done this. It breaks out again, and then I go in, but I'm wrecked. My head is wrecked, you know, and it's taken me 3 goes to get in on the trade. Okay, until you realize this is the final bounce. This is the bottom. After this, it's up. So I go in here. And again, I catch it all the way. I go in here, I pull my stop loss down here, and again, I just sit back and I let it go. Okay, it's a much better position. You want to trade from a position of strength. That's a beautiful position of strength, yeah. Okay, so now.
So you're saying, once you catch the 1, 2, 3, 4, and then the A, B, C down, and you put your trade in. You know that's a breakout, so you just kind of sit back, like relax a little bit, like don't let like small drops in the price movement like deter you from just holding at that point.
Yeah, exactly. Look, if I go in here, I pull my stop loss here, don't even get tested. Even this sneaky little thing coming down here, doesn't matter. I'm here. And I know it's not going to go below again, so I wouldn't stress out when this is coming. You know, and to be honest, this is part of the Elliott wave. 1, 2, and then up it goes. So I'm expecting a retrace back here. I'm expecting, because one, and that's why I think there's going to be a double bottom in at the moment, is it came down to the C, we went up to the A, and I think it's going to retrace back down to the C, coming very close to the bottom again, and that's going to be the 1, the 2, and then you see it taking off. So that's why I think there's a double bottom coming in at the moment, yeah. And again, you can get a bit stressed out if you're not used to it. Go, oh my God, it's come back down again. No, you know what's going on. So and your stop loss is here. You just let it do its thing, and then on it goes. It just takes a bit of practice. It takes a bit of practice to get familiar with. Look at the arc here. You're getting familiar with reading them. You're reading the impulses. 1, 2, 3, 4, 5, 6. You know the next one is a breakout. And I know this is on a leg up, so I know it's going up that way. So again, this is the one that I go in on. This is the bottom that I'm looking for to catch this. Very sweet. It's a really sweet way of trading, because what you want to avoid as much as possible is getting caught in stop loss battles. Is you go in here, you pull your stop loss down here, and then you're in the red here, and it's doing all this, and you're all stressed out while it's in the red, waiting for it to turn green. Same with this here. You go in here, you pull your stop loss down, and then you're in this stop loss battle. So you're looking to avoid the stop loss battles, essentially. Yeah. Okay.
You're pretty much just saying have patience in your trades.
Yeah. You got. The more familiar you read the arc story, the more confidence you get in it, the more it shows itself to be constant and true. Look at the different shape of the triangles, but it follows the same repeating pattern over and over and over. That's skyline there. That's skyline there. So they're peaks. The peak is always skyline. It's always the top of an Elliott wave. There can be 1,000 different shapes, but you're always going to find the top at the top of an Elliott wave, and that's skyline. You're always going to skyline in every arc. It's going to do an ABC correction down. It's three spikes. It comes down in 3 spikes. First spike, second spike, third spike. Always, always, always there's going to be a third spike. After third spike, you get a smaller Elliott wave going up. This is mountain peak. You know, actually, this is mountain peak. This one, it's got drawn out. There's sideways action. This is actually mountain peak. This is mid-range high. Where here, this is mountain peak. Right down here is mountain peak. That's mid-range high. So this is part of the challenge, is being able to read them. So I probably would have called this mountain peak for sure. And then it comes down here, and then it comes back up here, and it breaks this. Now I reset and I go, okay, no, that's actually mid-range high. This is mountain peak. Now why did this happen? It's because there's sideways action. When you get sideways action, you have to edit out stuff. This here is fecky sideways. So you take all this out. In your mind, you edit out. This is all sideways here. You sort of have to edit this out. And when you put the pattern together, it shows all the peaks. So there's times when you get sideways action, and it gets a little bit more challenging. But it always shows itself. It always shows itself. Okay, so now here's the bottom. You see, we're on the 1 hour again. So this is part of the challenge. Is this here? Because see, this is an Elliott wave up, and I included it all in the 4 hour, but I'm going to have to break this down in the 1 hour into sections. So there's a bottom, there's a top, there's a bottom, and then there's the top. Okay. So now here's an Elliott wave up, an ABC correction down. Okay. And then you have an Elliott wave up, And again, you can see that this is the bottom that I would go in on, and I'd catch this Elliott wave up. Is why would I do it here now and not wait for the next one? Okay, is again part of my experience is look at where this bottom is, look at how far down this comes. So this is on the way up. This isn't gonna come down anymore. So I know here that this is part of a greater confluence. Is 1, 2, 3, 4, 5. So I would look at this and I go, you know, this looks like this might be the 1, 2 of the 4 hour or the daily, and on the hourly this is one wave up, one wave down, and then you're getting that sharp pump up. But that just takes experience with reading the pattern and looking for confluence over the different timelines. So that's a big tell for me when I get a drop like that, is that and you see the Elliott wave coming in is I'll show you this now. Here's the bottom. I'm putting a fib on this. Here's the top. Now, because it's moving in a parabolic nature, is this Elliott wave here, this impulse, lets me measure the next leg up of this impulse, and this is 3 legs up. Okay, so now when I come to here, I'd normally go to the 618, but because it's in a parabolic nature, I have a tendency to go, well, let's go to the 272. So you can see that the second leg of this is far closer to the 272 than the 618. Okay, so when XRP starts to kick in on the next bull run, when I'm doing my fibs, is I'm going to start measuring the legs not from the 618 but the 272, because of that extra volume that's going to come in. So I would know that this here is setting up this. I can see that the drop of this is setting up a much bigger pump. The bigger the dump, the bigger the pump. And this is a telltale sign for me. So when you see this like this isn't going to come do like this. Now this is ready to kick off. And to be honest, even if it wanted to do that, I would go in here and then I would let it play out, and then it eventually find its way up. And this is the conversations that we'll get into as we go along. We're just refining the practice, yeah? Knowing how to trade on the way up and knowing how to trade on the way down are 2 different things. So you would have heard me talk a lot in the last month about how to trade down, because we were in a downtrend. So there's a bottom, there's a top, there's a bottom, there's a top. Now again, this is where, do I leave it here? And here's one Elliott wave up. Here's an ABC correction down. Here's another Elliott wave up. This is where it gets a little bit challenging on the hours. Is if I went to do this, which I reckon I probably would, because I think this makes more sense, especially when we start getting to the top of a wave, is it gets bigger. The arcs get bigger. So that I go for the full peak here. Is I bring it all the way down. No, I'll go to here and I'll put this one like that. Okay. Now I know that this is peaking out. Okay. Because as I look on the greater timeline, is you can see when this started is here's the 3 steps up. So 3, 4, and then 5. It's topping out. I know now there's going to be a bigger A, B, C correction. So I'm catching the top of this. Now, again, this is where this gets tricky. Look at the volatility of this. This is a tricky one to trade if you don't know what you're doing, because oh look, it's breaking out here. You go for your short, and it comes down here. Like, look, it comes down, shoots back up, you get knocked out, you all go again, it comes down, shoots back up, you get knocked out again. Is you go, oh Jesus, is it going up? You know, is you get freaked out, it's going down again, and then you're just too frightened to go in again because you're like, I don't know what's what. So now where do you reckon your best entry point is here? What do you know this to be? What do you know this point?
That's Mountain Peak. So you come after Mountain Peak.
So you know this is the top, don't you? So you know that after that, there's going to be the drop. So this is your entry point. You go in here, you put your stop loss here, and then if this wants to go and have all its drama, let it have its drama, and you're away from it. You don't get caught in this at all. So now here's the wave. Here's the first wave up, and then a correction, and the next wave up. Now here's the wave down, and you know this is going to be sharp drops because it's the top. So you know that the sharp drops are going to come here. These are the three spikes down. Okay, so you want to catch the top here, and then you want to again trade these down. And rather than trying to trade each one of these because they're volatile, is just stay here and let it go down. And when it follows down to 3 steps down, is you went in on the 18th of May, you're taking profit on the 23rd of May, over 5 days. Over 5 days, you're making 67%. Okay, and again, do you see the dump that just happened? I made a lot of profit in that dump. And that dump, that 35% dump, happened in 2 15-minute candles. I made a lot of money just in a half an hour. Now, I was chasing it for weeks. You've been hearing me for the last week or two going, this dump is coming, this dump is coming. I spent a bunch of all late nights staying up, waiting for it. So as much as it lasted 15 minutes, I was hunting it for 2 weeks. And more than worth it. More than worth it. So now, here's the top. Now look, we're changing. We were mapping on the way up. Now we're turning into the bear. Because we're on the way down. So it changes. And always after the peak, you're always going to have a big arc to the top and a big arc on the way down. And look at that volatility. Absolutely sweet. So swing trade, beautiful one. And then another swing trade. So you can swing from here to there, to there, to there, to there, to there. You can do lots of ones or you can do a bigger one. Okay? But again, is you get impulses. Look, there's an Elliott wave impulse. Here's an ABC correction. Elliott wave impulse, ABC correction. So here we come down, wave up, wave down, wave up, wave down, wave up. And because we know we're on the way down, this final small Elliott wave is telling us that we're now coming into a greater ABC correction. And this can be measured by the previous movements, which again, I will get into. I was going to map it out there. We will use the Elliott waves, the ABC corrections, and then layer in the fibs to get measurements on all those. But that's another day's conversation. I'm keeping it very tight to just showing you the arc pattern today and how you're triangulating price action. And how once you get used to it, it does take a bit of practice, once you get used to it, is literally you're mapping out the impulses. There's a top, there's a bottom. There's a top, there's a bottom. Okay. And I'm going to put that there to include it all. Okay. And again, you get confluence. And what do I mean by confluence? Is there's the bottom of the hour. There's a bottom of the hour. but equally it's a bottom of the 4 hour. It's a bottom of the daily. It's a bottom of the weekly. You've got the bottom of all of them. That is a very strong confluence. There's a final peak. Here's the final bottom of the hourly, the 4 hourly, the daily, and the weekly. What is this telling you when all you get a confluence in all those? If it was just a confluence of an hourly, okay, you'll get a breakout that's going to be up here. But now when it's the breakout of the weekly and the daily, it's not telling you that it's going to be a small breakout. This is an enormous. Look at this. Woohoo! So when you get a confluence in all the timelines here, and again, this is back to what I was saying to you about what's happened with XRP, and same with Ethereum and all the coins actually. All the coins, there are different points on the timeline, but they're all in the same correction. Here is the end of the ABC correction on the weekly, the daily, the 4 hour, and the hour. Right here, that beautiful moment of confluence. Then you get the retrace, which is where we are now, and then look, or it goes up, and then look, you get this retrace down, and it's creating this double bottom. So this is what I'm telling you, is that we're floating around here. I think it's going to come back down here, and then you're going to get that. So that's where you're going to get with all of them. You're going to see all the markets, all the coins do something like this, and then off it goes. And oh my God, the sky is falling in. Oh my God, we're out bull market, or bear market. No, this is the end of the bear trend. This is the beginning of the bull trend. So that is the bigger picture. If you're just trading on the 1 hour or the 4 hour, you won't see this coming, because this is the daily and the weekly as well. So if you see that this is the confluence of the higher time frames, your clarity, the ability to zoom out and see the bigger picture, tells you that this is a bottom that is bringing this in. If you're just trading on the smaller times, again, you'll think the sky is falling in and you don't see the bigger picture. And that's why you'll hear a lot of people go, oh my God, the sky is falling in. They're not able to zoom out to the bigger time frames and make basically see the bigger picture. Okay, so look, we're going back here again. We're going back here again because we are going into the 15-minute. Because for you guys, I need you guys to start practicing. I need you guys to start practicing and have lots of trades to practice in. So now there's the 1 hour. I'm going to bring it down to the 15-minute. Okay, and the fecker is going to make me scroll now. So where is this? Okay. This is very annoying lately, that it should, when I change the timeline, keep me centered on the price action that I was actually working on. Okay, so I gotta wait until my chart needs to populate. Let me just save this before I refresh the page. Okay. There we go. Okay. So now, look at this. So let's just give you a zoom out so you get it. I don't want that to be so small. Okay. So these were the this here was the 1 hour on the way up, the peak. Here's the drop. So let me just do this one. Okay. So everybody remember that this was the 1 hour, this is the peak, and then here's the drop coming down. So let's map out the 15-minute on this one. Okay. So now this started on the 18th of May, and it broke out on the 18th of June. May, June, a month. There you go, a month. Okay, so now we want to get to a point where we can start looking for trades that, it'd be great if there's at least one trade a day. Okay, so now we're on the 15 minutes. So every one of these candles is now a 15-minute candle. So I'm zooming in here. Okay, and there's the triangle. And let me see where I'm going to start with this. Where would I like to start? I'll give myself a nice easy one. Okay. Okay. So now, here we go. There's a top. There's a bottom. Now on the 15-minute, this is an Elliott wave. There's a top, and there is a bottom. Now again, my 15 minutes are yellow. There's yellow. Okay. Now we are still following the same pattern. I'm going to have to put this up here to fit this in. Okay. So now just to show you is that when you zoom in on this, we're still following the impulse waves. It's just we're zooming in to a smaller and smaller time frame. 1, 2, 3, 4, 5. Still an impulse wave. We're just down on the 15-minute with it. Okay, so here's the 3 steps down. So this is skyline. Third spike, mid-range high, first drop, mountain peak, third drop, final peak, no, final bounce even, final peak, final retrace, and then down we go. So if you're not familiar with those names, I'll be doing a session on them again. But look, here's a wave, a wave, a wave, a wave, and then down. And we're following the impulses. And we know because this is a top, we know this is breaking out. So I would be looking for 2 entry points. One is here. I'd go in on a short here, and I would just follow it all the way down. I know this is mountain peak. Just follow it all the way down. Because here's the breakout, and all the way down here. And then I'd be taking profit here. Is if I wanted to take profit here, okay, wait for it to trigger again, and I'd look to maybe take profit here or there, or go short here and go in again. But to be honest, I like to go in on mountain peak because I know that there's a sweet trade here, and once it's off and moving, is I can just sit back and just nurture it and follow it as it goes down. And dollar cost in. Put a little bit in here, put a little bit more in here, let this go. When this goes, put a little bit more in here. Here's the 3, here's the 4, put a little bit more in here, and there's the 5, the blow off top. So anyway, this is the 15-minute. So how long is the 15-minute? It started on the 18th of May, and there it is, the 22nd of May. 4 days. Swing trading, there's a short up here. There's the long. There's a short. There's a long. And then there's a short. So 1, 2, 3, 4, 5. 5 trades in 4 days. So when you go down to the 15-minute, lots of trading opportunities. Now again, this one might be at 3 o'clock in the morning your time, so that's not the one for you. Maybe you get up in the morning and this one is for you. You map it. You see the ABC correction. You get the bottom of it. Okay, and then there we go. You're going to go for that impulse and catch that there. And again, we measure all these out. You're using the support and resistance lines and the fibs to measure it out. Okay. So now, the next one. And again, the more familiar you get with this one is going to be more sideways. Once you get that initial drop, because as much as this is the 15, I also know I'm looking at the hour, and this is the volatility of the hour, and then here's the consolidation. So I know when I move into the 15-minute on this one, is that this is going to be a consolidation arc. So now, while there's great profits to be made quickly here, is this one here. Look, I catch the bottom here, okay, and then I go on a long, and I know that this is going to get drawn out because I know it's a consolidation arc. So rather than me trying to catch these little movements, and to be honest, if we measure the percentage, they're probably not that small. But when you're doing a lot of trading, you go, look, I catch this here. I'll just wait till it goes to mountain peak. Skyline, third spike, mountain peak. And I'll just let it do its thing. You know, and it's just, it's a lot more stress-free. You just need to be patient, and you need to know, like there's 98%, that's 100%. So if I put 1,000, if I leveraged 1,000 here at 10x, put in 10,000, is over the space of 23rd of May to the 26th over 3 days, is I would have made 100% of my leverage. If I put in 100, I make 100. If I put in 1,000, would have made 1,000. And you just catch the bottom, you just let it do its thing. And you're following it. Okay? And then the same here, because you know it's a consolidation one. So rather than getting actually, do you know what? I'm telling you my bias because I'm at this. I'm showing you where I'm at. So let me stop showing my bias now, and then let me think for you. So look, when I do this, look, it's very different. Here's a swing trade. My apologies. There's a swing trade. Look at this to that. Super duper. But you could trade to this. You could trade to that. You could trade to this. You could trade to that. There's loads of good trades in here. My apologies. Because look, here is, that's 50%. Is this one up from top to bottom? That's 100%. You know, there's lots of when you zoom into this, there's lots of trades. I take back what I said. I'm showing my own bias there. There's a 31% trade. And again, that's 3 fantastic trades. You make 50%, you make 100%, you make 30%, so 180%. You're not trying to catch the tops all the time, so you don't make 100%, but let's say you make 120%, because you allow for spaces at the tops and the bottoms. So over 3 trades that went from the 22nd of May to the 30th of May, so 8 days, 3 trades, and you're making 120% of whatever you traded. Okay, it's a pretty good week's wage. And depending on the amount of money that you're making, is you could turn a week's trading into a month's salary. You know, And when you get consistent, if you do it on $10, is after a while, whether it's $10 or $100, it doesn't matter because it's your consistency. And then after a while, it doesn't matter whether it's $100 or $1,000, it's the consistency of you doing this. Is if you can't do it in $10, don't think you're going to be able to do it in 1,000. You're only going to get wrecked. But if you can do it in 10 consistently, it doesn't matter whether you're using 10,000. It's the consistency that matters. So you're doing $10, you're making trades. Okay, you're winning yourself a couple of dinners. You do $100, you're winning yourself a couple of days' wages. And again, I'm stretching out an average. I'm making a big assumption there. You start trading on the thousands, and you're in 2 or 3 trades. You're making either your week's wages or your month's wages. You start trading on the multiple thousands, and 1 or 2 trades, and then you're making a month's salary. So, but again, it's the consistency that makes the difference. And it's being patient enough to win the trade, not the money. So here we are here, there's the bottom. There's a top. There's a bottom. And again, we're going to have confluence here again. Okay, going to have confluence here again. So that here's the 15 minute, but here's the hour. Excuse me, so the hour and the 15 minute are meeting here. The 4 hour is meeting here. And you have this big drop. So I know that when the drop isn't just going to be for a 15-minute trade, it's going to be for an hour or a 4-hour trade. I know the drop is going to be a big one. So I know that this one isn't going to be a small little one. This is going to be a big drop. This is the breakout. So again, where would I go in on my entry here? I go in on the local top. So either mountaintop back here, or I catch one of these peaks, I pull my stop loss up to here, and then I just let it find its way down. Where look at this, imagine I tried to go in and, again, this is what I used to do. And again, it's not a bad trading strategy, but you're sort of you get caught in the stop loss battles. You get the breakout, there's the retrace, and there's your confirmation. So you go in, you pull your stop loss back 15%, it's fair enough. And that's great, it's moving away, it frightens you there, it goes again, it comes back up again, and I go, oh my God, and then all of a sudden, it just comes up enough just to knock you out. Just to knock you out of your stop loss, and your heart is broken, and then it's like it drops like a lead balloon, and you're like, damn it. So now you're trying to get back in. So where do you get back in? Or retrade. Okay, I'll try and get back in here, and then this comes up, knocks you out again, and your head is melted. So you get head wrecked here, and you step away from, you go, oh, I just need to let it happen. And then you've missed this opportunity. So many times I've missed these opportunities because my head got wrecked here. Until you realize this is the positions that you want. You catch one of these and you just let it find its way down. Okay? So look, this is 3, 4, 5. This is the peak of the Elliott wave. Is now you have the ABC correction, which is also an impulse wave. 1, 2, the fact that it comes back here like this and doesn't break it only confirms my position. After 2 comes 3, I know that this is going to actively move away. Okay, it's going to actively move away. Okay, and then down it comes. 3 spikes. 1, 2, 3, all the way down. Okay. So now I'll take this one to that one, to that one, to, I would say, where do I do this one? Probably do it to there. Okay. Now this is a smaller one. I've got 2 options here. Is I would either do a small one like this, okay, or I would decide to just take it. I decide to take it all the way down. Lately, I used to do the smaller ones, but lately I'm just taking it all the way down. And the reason why I used to resist that, because when I take it all the way down, is my 15-minute arcs sometimes start to look like my hour arcs. And I've just accepted that, yeah, it's confluence. Sometimes my hour arcs really match up to my 4-hour arcs because of the nature of the pattern. You get really strong confluence where, you know, this is a really big 15-minute arc, but also on the hour, they're mirroring each other. Now I just accept that that's a confluence, and sometimes the 15-minute arcs can be really big ones. Okay? And again, Elliott wave down, Elliott wave back up, ABC correction, smaller Elliott wave, ABC correction, and bigger Elliott wave. So again, down, up, smaller again, and then up again. And now again, we're going to have consolidation, okay? Because remember, we had this big drop. So if you're going to have this volume, you know that the arc afterwards is going to be a smaller one, and it's going to have consolidation. So on the hour, you got this big drop. Here's a wave. Here's another one. And then on that 15-minute, here's a wave, down, up, down. So it's following the same pattern. It's just we're getting into this smaller timelines to trade it. So you know that when you get one of these, next one is going to be more of a consolidation. So best thing to do here is catch the breakout, catch the bottom, catch the peak, catch a bottom, catch a peak, catch a bottom. Now this is where it gets tricky. Is we're back to this same pattern here where look, it spikes up like this. Okay, and again, these aren't always the easiest to trade. Yeah, is the only way that you don't get caught in these is by reading the impulses. Is that you have here is a peak of an Elliott wave. You're going to have an ABC correction, and the fibs will tell you that it's going to come down to about here. So now you have an ABC correction down here, okay? And then when you start to see, you can measure this very simply. Here's the previous impulse. From here to there is the previous impulse. This impulse tells me what the next impulse is going to be. So this is telling me, look at this, 618. Pow! Right to there. So you got to really be following your impulses and go, look, this one is telling me that the next impulse is going up to there. So now when I have this correction, is this next impulse is going to there. Now the problem is, hang on, this is going up here, but this is actually on the way down. I know this is on the way down. Okay, then what the heck is this? Okay, what this is on the 1 hour, this is mountain peak. Now, again, if you're not familiar, you're like, what is he talking about? Don't worry about it. I just know that on the 1 hour, this red one is, here's third spike, here's mountain peak. But on the 15-minute I'm mapping this out, why is this impulse telling me that there's another pump up? Because this is 3, this is 4, and this is 5. Of this impulse here, 1, 2, 3 even, 4, and 5. So now this impulse, I can map it. But hang on a sec, on the 15-minute, it's going to go to here, it's going to do mountain peak, and then I know it's going to go down. So now I measure this, I go for a long from here to there, and it's a sweet little one, but what I'm really looking for is to catch the short from here to there. So now here's a bottom, here's a top, there's a bottom, and then there is, let's say there's a top there, and I'll bring this down like this. Now look at this 15-minute, becomes a descending wedge. So now here is skyline, here's third drop, here's mountain peak. Why is mountain peak like that? Because it's on a descending wedge, and here's the 15-minute. Mountain peak, third drop, final peak, final bounce, final retrace, and breakout. Okay? Again, this is because, again, I know it. I've been through it enough times to know it. So now, here is, again, another. Look, there it is there. Hang on. I'll do it from here, there, to there. Okay, and I will go to there. Okay. Let me get this correct. And this is where this gets a little challenging at times. I'll put this one here. I'll put this one here like this. Bingo, there it is. Okay. Now again, I'm doing this is now I know that my mapping of this arc is going to be from here, because it's going to give me 3 steps down, 3 steps up, and then I'm going down for the drop. Okay, so sometimes you get this where the shape of the, like this is, look at this, this is literally a descending wedge. It's dropping. It's like a dropping knife, you know. Is it doesn't let me fit all the candles in. So this is one of the few times where mentally I know this is where I'm reading it from, but from the point of view of the shape of the arc, is you'll see this bit left out. If I wanted to be pedantic, I just put it like that, so nothing gets left out. So my Asperger's doesn't like things getting left out. So you can see that on the 15-minute, look how steep this is, and this is channel. Is literally as we go along, is literally this is just we be putting this in as well. We'd be putting this in as well, and you can just see that we're mapping the channel, and that's what we've just done. We've been on a downtrend the last month, on a bear trend the last month, and we've been just mapping this channel down. And because I was looking at the longer timelines, I could see how far this was going to go. And halfway down, people wanted it to turn up, and they were going, turn up, and then the hour was showing it's going to break out. The 15-minute was showing it's going to break out. The 4 hour was going to show it's going to break out. But the daily and the weekly, we were going, no, we have a C that still needs to be complete. So until the daily and the weekly had their C connect touch, it was always going to keep going down. Okay, so now here we are on the way back up again. So this is where it gets, again, this is where it gets a little bit, you got to be adaptable. This is the challenge with it. Is we spent the last month on the bear trend. Now you got to switch to being a bull. Now on the 15-minute, you were a bear for the 7th of July to the 20th of July. Okay, so for 2 weeks you were a bear, you know, and now you got to switch. You go, okay, now I'm a bull. So now you're going up. And again, you can see from the 20th of July to the 29th of July. So guys, I could keep going and going and going, and you can see that it makes sense. You can also see that some of the arcs are easier to map out, and some of them are more challenging. And that, how do you know what's what? Is when you're able to start to use confluence on the different timelines. It really helps. It really helps. As an example is this one here. Is knowing that this is mountain peak on the hour, you can map this on the 15-minute and you can trade it. Is if you weren't looking at the hour and you were mapping this, it's quite possible that you would think that this is going to drop, and you go for the short here, only for it to go down, turn back up and get knocked out. This happens to traders all the time because their ability to measure the different timelines is limited. So that's where we're going with it, yeah. Now I'm not going to do it, but we could go down to the 5 minute. Okay. Okay. So I'm not going to go searching for that, but I'm going to show you something. I just want to get a couple of candles and I'll show you something, yeah. Just to prove a point. Just to prove a point. Okay. So there's the 5 minute. Okay. There's a bottom, a top, a bottom, and I think we got to do that top there. There we go. There we go. There's a 5 minute. If we wanted to maybe make it a little bigger, is we could trade. Maybe we couldn't. Maybe I'm being too. Oh no! This is how you would do this. So you got to bring this one here, and you got to bring this one here. There you go. There you go. There you go. There is the bottom. Okay. Then I will put it there. There we go. Okay, so now look, here's the 5 minute. Let's go into the minute.
Tell that time. Did you change it because the time?
Say again? Say again, please. I'm sorry, I can't make you out. Will you say again? What's your question?
Did you change the triangle because it was odd?
Yeah. I went to trade. I went to trade from the top. I changed where the top was, and I changed where the top was to the bottom. Yeah. Yeah, but let me just.
Yeah, did you do that because the triangle looked odd?
Yeah, it wasn't fitting. It wasn't fitting. So I moved it around to catch the impulse, to catch the better impulse. So I started at the top rather than the bottom. Yeah. So I'll do this. I'll do this here. Look, this is on the 1 minute. I'm just making a point that no matter what timeline you want to go down on, okay, look, here's the impulse wave. Here's the bigger one. And it is an impulse wave. You measure out 1, 2, 3, 4, 5. It's an impulse wave. You measure it every time. Here's the ABC correction. Here's another one. Here's another one. This is on the minute. Map them out. Now let's go down onto the 15 second. Just making a point. Because this is a fractal pattern, so it's true everywhere. Like you can see now, because of the amount of information it has, the process is getting really slow. Yeah, you'll find that when you go right down. Yeah. So look, I think that's the one I just did. Okay. Yeah, that's the one I just did. That's the one I just did on, was it the minute? Okay, but now we're down on the 15 seconds. Let me do this correctly. Let me do this correctly. things are starting to freeze up a little bit. Okay, there we go. There we go. Okay, so now in the 15 seconds, let's do another one. Here's a bottom. There's a top. There's a bottom. And then I'll do a top here to fit that in. Okay. And actually, I'll do that there. So then I'll bring this one over here to capture that. Now this is the same situation. Here is an Elliott wave. At this time, on the 1, or is it the 30 seconds? This is it's not a mountain peak, but it's a skyline. And then here's an Elliott wave on the 15 seconds. Okay, but again, this is 1, 2, 3, 4, 5. So now, knowing this on the 30 second, when I map this out on the 15 second, tells me that there's one more top to go. If we wanted, we could even do this. And we could catch the peak. Here's the peak, go in a short, and then catch it on the way down. So here, top, at bottom, top, and at bottom. Okay. So now this is on the 15 second. It's really hard to just pulling this along. The system is struggling. Again, here's a bottom, here's a top, here's a bottom, and then there is a top. This on the 15 second. Okay. Again, is if we go down into the 5 seconds, I've got a really big computer here, so this shouldn't be a bit of, it should be able to deal with this. Okay, I'm not going to go looking for the piece I was working at because it's going to just be scrolling all over the place, you know. But again, look, you can see the same wave patterns. You can see the same wave patterns. So if I do this bottom to this top to this bottom to that top on the 5 second, 1, 2, 3, 4, 5. There's an Elliott wave. 1, 2, 3, 4, 5. A, B, C. Same. On the 5 second. Same pattern. Bring this one all the way over here to catch it in. And look, we have that same breakout here. But that's okay, because look, it's heading up here. We're right at price action. We're right at price action on the 5 second chart. So a bottom, top, bottom, and a top. So we don't know where this is going. Okay. So now, has anybody any questions?
I have a quick question.
Yeah.
I was just looking at the Ethereum chart with the triangulation that you were doing with the A, B, and C's. And I was wondering if we could possibly take a look at that and you can kind of like walk through just that analysis that you did, kind of like a practical example, potentially.
Yeah. Have you any questions on what I did here? That's no problem. But have you any questions on what I did here? Does it make sense to you?
Yes, it does. It's really helpful.
Okay.
Thank you.
Isn't it fascinating? So look, there's the 5-second ones, and there's the 15-second. I'm back up on the 5 minutes. There's that one here is the 15-second. Those smaller ones are the 5-second ones that I did. There's 5-second ones there as well. When I zoom back out to the hour, okay, look, they're super tiny. But somewhere along here, we should see the, there we go. Here's the 15-minute ones. So there you go. So on the hour, look, there's the remember the hour is the red one, the red ones here, and there's the 15 minutes mapped within the red ones. So hour, bigger, well, not an hour, I haven't done an hour for that one. And then here's the 15 minutes mapped out within it. When I zoom back up to the 4 hour, okay, so again, you can see the 15 minutes within the hour, and then the 4 hour is this blue one. So 4 hour small one, 4 hour, 4 hour. There's the smaller red hours within it, and there's the 15s within it. And remember, they're all, think about this, they're all following the same arc pattern. So on the look at this big arc pattern here. And when you zoom into the smaller time frames, it's a fractal. You're going in and seeing the same pattern over and over and over. You're just zooming in and in and in. Okay, and then we come all the way back out to the day. Now this is where it gets, you can't see it so much, is the day are these big, they're meant to be orange. Somebody put your, okay, thank you.
What's going on, man?
Okay, you're off, your mic is off.
Oh, it's all good.
I don't know, kind of I made 2 trips to Big Sky with doors, and
okay.
hardwood guys were going to start installing. Now they say maybe late tomorrow or Wednesday.
Okay, so.
Hey, Polanco, can you mute?
Yeah, Polanco, I've muted Polanco. Guys, you just got to remember when you talk, you're unmuting yourself. You have to then put yourself back on mute, or we start finding out all your business. Okay, so Big Sky, I've heard of that place in the States. Okay, so let me go back to Solano. Okay, excuse me. Okay, so now look, we're back on the daily, and again, these are the daily ones here, and then this is the weekly. And if you zoom in, is again you're zooming in. There's the 4 hour, there's the hour, and there's the 15-minute. So the more you get used to this, you gotta start mapping them out. Go down, zoom into the 15-minute and start mapping out. Even go down into the 5-minute and start mapping out. Okay, and post them in the chart analysis. Is if you're already familiar with that, is start to do the 15 and the hour and start to measure them off each other. There's an impulse wave on the 15-minute, there's an impulse wave on the hour. How are they relating to each other? So that you're looking for confluence, is that you see this big wave up here, this is skyline on this purple one, it's a skyline on the 4 hour. It's the peak. It's skyline on an hour, and it's skyline on a 15-minute. So the skyline means it's a peak, and that it's going to go down. So if you're looking at the 15-minute and you're going, is this the peak or not? I'm not sure. I don't know whether this is the peak. Well, does the hour tell you it's a peak? But the hour tells me it's a peak as well. The 4 hour tells me a peak. It's the peak of an Elliott wave. Yeah, this is a peak. I've got confluence. This gives you great confidence. From confluence, you get confidence that you can go in a short here and that you're in a really good trade. Now, how good is the trade? Well, it's not just the peak of a 15-minute. It's the peak of an hour and a 4 hour. So look, this is a big drop. You know that there's going to be a sweet trade here. So now, when I go in here, do I just go in for the small or do I go in for all of it? So there's an amazing trade here that went on for the 18th of May to the 23rd, 5 days. An amazing trade. And when you see the confluence like that, that's when you stay in and you go for the big one. Okay? So that's why scaling up through the different timelines gives you a much clearer picture of where price action is. It's the same with this. I'm hitting a bottom in the 15-minute, but I'm also hitting a bottom in the hour. I'm hitting a bottom on the 4 hour. I'm actually hitting a bottom on the day. What does this tell you? It's going to start going up. So where you might not be sure about it on the 15, but the hour and the 4 hour supports you knowing this is the swing. So on the 15-minute, it can be fickle. The hour is a bit more solid. The 4 hour is even more solid. The daily is even more solid. So that's the benefit. The more you're able to move through the different timelines and measure them together. It does take practice. It does take practice. The first thing you need to do is start mapping out the 15-minute or the 5-minute and mapping out your arcs. Is look for a big wave that is followed by a smaller wave that possibly has a smaller wave and then a breakout. If you see a breakout, you know that it's the completion of one arc and it's the beginning of another. Map it out. And it's trial and error. You just got to feel it out. Is look how I felt all this out. And again, I'm doing it a long time, but you can see sometimes I've got to try and figure it out. I'm trying to get it right. I should be up there. Even I'm still feeling them out as I go along. Okay. Any other questions? So what I'm going to do is I've saved that now. I'm going to post this up and I'm going to share it. Okay. So and then I'll post this up, and then anybody who's trading Solana copy this. You can bring it down into your own trading view, and you can start editing it yourself. What I want you to do is edit them out into separate pages. So look, excuse me. No, wrong chart. Let me switch and I show you how I have my own, yeah? And I'm sure I've shown you already, but again, there's people here who I may not have shown. So I'm just going to show you quickly. So I layered them all in together so you could see. But now here's my 15-minute chart. So that I have this one. Here's my hour chart. My 4 hour, my daily, my weekly, and then my monthly. Thanks to Multi-timeframe. Multi-timeframe was very generous and posted this one. So here's the monthly. Amazing, from 2017 all the way through. Now, when you put this on the log, it shows it differently. Look at this. This is a massive Elliott wave and ABC correction. Elliott wave, ABC correction, Elliott wave. A massive Elliott wave is coming. And this is all the way from the 1st of January 2017. And how you measure them is that the impulse wave here gives you an indication of the next impulse wave. So you take the fib here, you put it there, okay, you look and you go, there's the impulse. The normal target is the 618. There's the normal target, 618. So this impulse is, imagine where this is going to go over the next year or two, is 253 per XRP. 59, the 414. When this hits the 414, XRP is going to be $59. The 212 is $20. So people are talking about this bull run, the next impulse, oh, it could hit $20. is absolutely could hit $20. That's one leg of the next impulse. You get a retrace. Next leg will take it up to 59. Next leg will take it all the way up to 253. It might take us till the end of 22, might even take us all the way to 23, but you can see where this is going. Massive. And simply because we're following the impulse, and this impulse guides us to the next one. So anyway, exciting stuff.
That will happen only if XRP fixes the issues that they have with SEC, right?
Yeah, no, that's it. Yeah, I understand why you're saying that, but no, every case that the SEC has ever taken on any coin always ends in a fine, and then either that fine bankrupts the coin because it's a small coin, or they pay the fine and on they go. So the SEC case won't limit XRP, Ripple, who are the company. It won't limit Ripple's potential. Is eventually they'll get some sort of fine and then they'll roll on. Is the bigger story with this case is Ripple is a really big company. Like it's a Goliath of a company, and it's one of the few companies out there that are actually a utility. Banks and governments are using their ledger. So Ripple have basically said, we're not going to settle with a fine. What we want is clarity, because there is no clarity. You know, and an example is Bitcoin and Ethereum got a pass, but Ripple doesn't. So why is Ripple being brought to court and XRP or Ethereum and Bitcoin isn't? Because there's no clarity, and there's the SEC and the people behind SEC, the real power, are trying to pick the winners. So now Ripple is coming along, and the Ripple ledger is its whole design was to do with transferring the financial system onto the blockchain and taking over the position of SWIFT. Bitcoin never had that intention. Ethereum, smart contracts, never had that intention. Ripple's sole intention is to be the new financial structure of the world. That was always its goal, and its real goal is derivatives. Is to be the system that works with cross-border finance, but really it's derivatives.
The new SWIFT.
Say again?
The new
The what?
The new SWIFT, like the current system is SWIFT, right?
Yes, the new SWIFT. Yeah, with instant liquidity, and nobody needs to keep billions on Nostra Vostros, because it's on-demand liquidity. Is you have your liquidity immediately. You don't need to save. You don't need to have billions and trillions of dollars held in escrow simply because just billions and trillions taken 5 days to get from A to B. It happens in seconds. So it is going to fundamentally change how the whole financial system works. Ripple is that is their sole focus. And why is Ripple getting pulled back now? The rest of the world is adopting Ripple. The US is the Goliath of them all. Is the whole world is the values based on the dollar. So until the US agrees the new system, is the rest of the world aren't going to adopt it. But it's not stopping the likes of Japan and all the Asian countries taking on the Ripple ledger. America is doing the deal now. France is on it. The UK is on it. All the countries of the world are getting onto it. Why is the SEC case happening? Is because the states want to be in control of the regulations. They want to maintain their position. And that's fair enough. They're the strongest. So now why is Ripple getting bashed here? Is because the deal is being done. By the time this SEC case is finished, is the deal is done. And that there will be regulations that will come shortly after that the world will adopt. And the first company to have true regulatory clarity will be Ripple and the Ripple ledger. And it already has hundreds of banks and dozens of countries already using it. This will be the biggest story of this bull run by the end of this bull cycle. So
Right.
DeFi is great. NFTs are great, very popular. The metaverse, phenomenal. It's going to be huge, but none of it matters if there isn't a financial system. The bottleneck is the financial system. Until the financial system comes onto the blockchain, none of this can be mass adopted. Until you have the internet of value, everything that's going on is just speculation. The only time that it truly becomes mass adoption is when the first utility is the most important one, which is finance. And Ripple is the new system. That's the position. So you're going to see over the next year or two is when this SEC case is done, Ripple's going to have clarity. Ripple's going to be put back on exchanges. Ripple's probably going to do an IPO. All the companies in the States that are on the ledger but not saying it are going to come out and say we're on the ledger. So you're going to have the likes of maybe an Amazon come out and say we're on the Ripple ledger.
Yeah.
You'll have the big
There were conversations with Amazon.
Say again?
As far as I know. There was conversations with Amazon already. They were public, no?
Yeah. Well, there was but there you go. Like I saw that as well. But again, when it comes out officially, when they say yes, we're on it. Like Bank of America is using Ripple Ledger. But now this is the thing that's going to make the difference. Is they're on the Ripple Ledger, but they're not using XRP for their on-demand liquidity. Wait until you hear the first major country or company say we are going to use XRP for our on-demand liquidity. Is once you hear that is going to be the trigger that is going to set XRP's price off on a face melting price. So you can look at it and go $259. That just seems outrageous. Well, if you look at Solana, we looked at Solana. Solana went from pennies to hundreds of dollars. This happens all the time. Is XRP is due its turn, but why is it taking so long? Because XRP is the one that's looking for true regulation, because it won't be mass adopted until there is international acceptance of it, and that the regulations are internationally accepted, and that the whole banking system and the governance of the world accept the transition from SWIFT to the Ripple ledger. So when you look at all these hundreds of banks and these dozens of countries all going onto the Ripple ledger already, why are they all going on it already? What do they know? Why are they positioning themselves there? So why is the price of XRP being suppressed? Because again, it's all about positioning. Like I was showing you on the charts, it's positioning. Is the banking system and the governance system of the world is getting in position to shift from SWIFT to the blockchain. And if we're all going to use the blockchain, we all actually need to use the one system. Okay, what system is that? Okay, I've said it's Ripple. Okay, if it's not Ripple, can somebody please point out to me who is it? Where is it? Where is this company that is putting themselves out and about like Ripple? Where is the competition? Point to me the company that is the competition to Ripple. And the simple answer is there isn't one. It's not there. So anyway, so again, you can see why I'm so focused on XRP. So the fact that this is all suppressed and the price is suppressed, and Ripple is the only top 10 coin that hasn't broken its all-time high, to me, that's good news. I'm happy for that to go on as long as it can, because when the price of Ripple is low, I can leverage and I can build my bag of Ripple coins super. As long as it's at $1 and I leverage on that, I can get a lot of coins. By the time Ripple goes up to $10, when I leverage is I'll still get the same value, but I'll get less coins. So I'm very happy for Ripple's price to stay as low for as long as it wants, because it's just helping me gather more Ripple, you know, or sorry, more XRP. Excuse me. So that's a story. That will be the biggest story by the end of this bull run. That will be the biggest story. So we're going to have a little look at Ethereum. Now, I'm not going to spend as long on Ethereum. Specifically, like, what is it that you want me to show you in Ethereum that I didn't show you in Solana? Because it's the same. It's essentially the same. So the person who was asking me for Ethereum.
Yes. I wanted to get a clear idea on reading that last part of the sketch that you put in the Ethereum chat.
Okay, which part? Which last part do you mean?
So I just like the C part. So like where so it goes from A at the top, it goes to B, and then it looks like it's going up towards C.
Do you know?
And then I was curious because I just saw. Yes, sir.
Do you know what? Do you know what we do? I know what you're asking, and it's a different conversation than the one I'm having tonight. So this is what we'll do: here is my Ethereum charts. There's my 15. Need to update this a little bit. This actually needs to be up here. Okay. So again, here's Mountain Peak. Look, Ethereum's just looks like it peaked at Mountain Peak. And I reckon it's going to start coming down for third drop. And see when it starts coming down for third drop, I think this is where we're going to get the double bottom. Is when it comes down for third drop here. Maybe final drop is what we'll do is it'll come down very close to this. It'll be a double bottom, and then we'll have the move away, and then we'll have the breakout, and it'll start to move away like that. That's what I believe is going to happen. You know. But while this is going down like this, is you're gonna have people going, oh, the world's falling in. It'll probably go down to 3,500 and about 3,500, 3,600, somewhere within this range, and then and then off it goes. I believe. So what I'm going to do is I'll post my Ethereum charts so you can have them, and then you can start following on yourself. Does that make sense? And then the conversation we're going to have next is the conversation you're asking. I'm going to go through Elliott waves and ABC corrections. And we'll have a thorough conversation about Elliott waves, mapping them out, and then ABC corrections. Because that's what you're really asking me. Do you understand?
Yep.
Okay. So what I'll do is tomorrow I will go through, I'll have that conversation. So I'll pick Ethereum, and we'll go through that, and then you can get clarity and ask me any questions you want along the way. And there you go. Now we know.
How can we check your charts on TradingView? Do we have to follow you or?
No. I'm going to go into chart analysis now in the Discord. Now up here is I have shared, so I've clicked sharing. So now I'm gonna take a screenshot of this, and then I'm gonna copy my URL, and I'm gonna say Ethereum 15-minute chart. Here's a link to it. You press the link in TradingView, and it'll open up this page, and it'll open up. I think it'll say a copy or something. And then it asks you, it's only a view. You're only viewing it. But if you want to edit it, you press copy. And when you copy it, that downloads it into your TradingView. Once you have it in, this is my TradingView. Now, once you have it in your TradingView, is save it. Is you just click this, it'll save it. And now you've saved this chart in your TradingView. Now you have this, and you can edit to your heart's content. And you'll have the 15, the hour, the 4 hour, and then the daily. Well, that's the 4 hour. That's the daily. And then look at them, study.
Thank you so much.
You're very welcome. Look at them, study them. You know, and that gives you your baseline, and then just develop it from there. But it doesn't shortcut the fact that you got to go back in the timeline of the 15 minutes, go back and start. It should be shown there now. Go back and map them out. And what you're doing is you're back testing. Is go back and map out and get used to mapping out your charts. You're mapping out the 15, and what you're doing is you're training your mind to mind map the arcs. Eventually you just start seeing them with your eye, but you're mind mapping, and you have to practice. So go back into the past and start mapping them out, and it gives you the history. And you can map it when it's going up, map it when it's going down, and notice the different challenges it takes for you to map it out, so that you're getting that experience, because it's going to really help you as you're mapping out what's going on right now and feeling it all out. So there's no shortcut around that. I'm going to be really honest with you. If you look at it and you go, I understand what he said, and then, okay, I understand it, and then you don't use it, is what you're going to end up doing is just staying on the one timeline, or you're going to start mapping out patterns, and it's going to restrict you to a tight space. And what I mean by that is every arc, you always want to be mapping this out. You always want to know within the arc, where am I? Because it centers you. So you're going to be doing this continuously. This is a continual process, not something that you just dip into. It's a fundamental part of your trading, your TA and your trading strategy. Look, I know this is Mountain Peak because I see the arc at the wave of it. Just by eye, I can jump in and trade here right now, and I'm confident enough to go down on it, to just follow it down, because I'm so used to it, and I know the pattern of it. Is if I took all this away and I just looked at this like this, and I said, what can you tell me about that? Is this going to go up or down? You should be looking at it going, God, I'm not sure. Where the arc's triangulation gives you your ground. I know I'm stressing it because it's that important. And then you're going to map in there's the hours. So you see there's confluence. The hour and the 15 minute is looking very similar here, yeah? And there's the 4 hour. Copy this for a sec. So you do this, you pop it in, and you go, okay, there's a really big 4 hour, and there's all my hours within it. So it's giving, and look, here's the Elliott wave up on the 4 hour, and here's you mapping it out on the hour, because this gives you lots of smaller trades. If you map out to 15, it'll let you go into even more details. It'll give you daily trades. The hour will give you multi-day trades. The 4 hour will give you multi-week trades. So get your daily trades sorted. The more you mature in your trading, is you can do your good day trades, but then when a peak on the 4 hour comes, this is a great spot trade. You sell here to buy back in at the bottom. You could do a leverage here and a low leverage. You could go, rather than a 10x, you go 2 or 3x here, and you put a nice amount of money in on a 2 or 3x, and you let it run. And it might run from the 10th of November to the 3rd of December. You let it run for a month. So you got to keep your X's low, because you don't want to be paying such interest rate fees on your leverage. But you let it run, and you let it run for a month, and in a month, well, that just says 31%. 31%. Is that 31%? No, that can't be right. No, it's well, it is 31%, but hang on. What am I? Yeah. I'm reading it wrong here. Always when you go from top to bottom, it's different. Basically, this is Ethereum. It's not XRP. Let me do it this way. The price of Ethereum here was 4,871, 3,000, basically 3,400. Yeah, that is at 31%. Anyway, you get my, sorry guys, you get my basic point, is that you can have your daily trades, you can have your multi-day trades, you can have your weekly trades, and then you can have your legendary trades here, yeah? So again, that is a 31% one, okay? Not great. For a monthly one, it's not great, you know? But imagine you did this one. Long trade here, all the way up to here, okay? And again, it's low leverage. It's like a Cook's long. Here's an 85%. And again, this was 21st of September to the 11th of November. So again, what's that? That's what, 6 weeks? Now, the type of trade that you would do here, and again, you work up to these, you're not doing this today or tomorrow, is, is normally you might trade and say, let's say you're doing $1,000 at 10x, okay? And you're doing that on whatever, or 100 or whatever it is, but let's say 1,000. On the trade like this is you do a spot, you buy here to sell at the top. But equally, rather than do 1,000 here, is you could do 10,000, but rather than a 10x, is you do a 2 or 3x. So if you did a 10,000 on a 3x here, and this goes 85%, is you've got 30,000. You put your 10,000 in here. Is at the end of this is you're going to have 8,500 on top. You'll have 185,000. Does that make sense? You'll have your 10, and you'll have another 8,500 on top of that. So over the 6 weeks, you'd make $8,500 dollars here, and you just let it run. You just let it run. So you'll have your dailies, you have your weeklies, and then you'll have your monthlies. So over, as we go along in this, is we need to get you sorted on the 15, is then we get you to the hour, then we get you to the 4 hour, you know, and then we get you to the daily. And that gives you an amazing range and adaptability in the different types of trades that you do. And you are looking for those big bottoms and those big tops. And then you're starting to trade not just over the short periods of time. You can start to map out your trading pattern for a year or for 2 years. Is then you start to map out the bull run and the bear run. Okay, so that's what the mature traders are doing. That's what the experienced traders are doing. Yeah. Okay. Anybody any questions? Okay, so it is 11:45. We start this at 9 o'clock, 9, 10, Jesus, 3 hours nearly. Okay. Guys, if you're still here, thanks very much. Keep working with your triangulations. And then tomorrow we're going to do a whole session on Elliott waves and ABC corrections. Yeah, that's it. Okay. Thank you. Have a great day or evening.
Thank you very much. Good night.
All right.
Thank you.
Cheers.
Thank you, Roy.
Thank you. Cheers. Bye-bye. Bye.
Thank you.
Thank you, Roy.
Super.